ESAF, which operated as a microfinance institution, was among the first ones to receive a small finance bank license. As the banking sector is roaring, ESAF is in the process of refiling its draft IPO papers. We have with us K. Paul Thomas, MD and CEO of ESAF Small Finance Bank, to discuss the IPO plans and the road ahead. Welcome to the show, sir.
Thank you.
Mr. Thomas, my first question is, you are in the process of refiling the draft IPO papers. Can we expect a listing in the second half, or are you looking at 2024 for listing?
We are in the process of refiling our papers with SEBI. So we are expecting to complete it by the second quarter of this next financial year. So that's a plan.
Small finance banks are offering more attractive FD rates than universal banks. Wouldn't this put a pressure on the margins?
There is an historical background. Most of the small finance banks were NBFC MFIs. So when we started, our liabilities were mostly from bank borrowings before we convert to a bank, and we had a pressure to refund. Close all our grandfather loans within 3 years. So when we started, we have offered a higher interest rate. But even then, that was below the rates. Even in case of ESAF, we were borrowing from banks and other finance institutions. So that's number one. So then, if you see the last couple of years, that SFBs have reduced the FD rates. And when all the other universal banks have increased the rates, we have seen that. So the margins on the difference between universal bank rates and SFB's rates, and now that it has come down, it has narrowed down. And again, why we are able to afford this? Most of us have SFB, especially in ESAF. Also, our asset class is mainly on microfinance, and it gives a higher margin. So margins are not much affected, because it is compared to the rates we were borrowing, it is less. That's why we were able to offer. But over a period of time, the rates have come down.
Scheduled commercial banks have performed well in the first half.
Yeah.
What has been your performance like? What is the
Yeah.
credit growth like, and can it be sustained?
Yeah, we also have performed reasonably well during the last 6 months. So and we are confident of sustaining our growth in the coming months and coming years. We are very confident, because we see a lot of market opportunity in front of us, because considering the economic growth India is targeting, the rural and semi-urban areas play an important role, but the credit outflow to these rural semi-urban areas is only less than 10%. And ESAF Bank, we have 70% of our bank branches are located in rural and semi-urban areas, and we have got a long experience in working with the customers from these regions. So we see a lot of the credit growth will happen in these markets, and our experience in working with these segments, rural artisans, weavers, farmers, micro entrepreneurs, all will give us an edge over other universal banks.
Net profits were in triple digits. The growth of net profits was in triple digits last year. Can we see something similar in this year as well? One. Two, regarding credit growth, what has been your credit growth like? Because the system has grown at 18%.
Yeah, so last couple of months we were focusing on our asset quality improvement. So we were also on the microfinance side. There is a new guidelines were to be implemented. So we have slowed down our credit growth during the last 9 months. Actually, we have grown only 10%. But in the last for this current quarter, we will definitely will be growing, and because the systems and everything is ready, and asset quality also improved a lot, so that we will be growing. On a profit side, we are expecting the previous years
full recovery post pandemic, or are there segments which are still not taken off?
Yeah, there are some segments actually. So we major 79% of our assets are today in the micro loan, and majority the fishermen community, the artisans, farmers, weavers. So some of them have some areas still have there are some issues, especially in the cyclone affected. Again, it has impacted, but otherwise generally it has come back, and we are close to the pre-COVID levels. So by March, we will be closer to the pre-COVID levels. Except a few areas, in all other places, we are back to the collections are back to normal.
Even the collection efficiencies are back to normal. Is that what you're saying?
Yeah, back to normal, but not up to the pre-COVID level. Pre-COVID levels will take another 3 to 4 months.
While you've expanded, you are still a niche segment player. Are there plans to enter into new geographies and diversify away from MFI loans?
Yes, definitely. So when we started, we were 100%. Our assets were 100% microfinance. So today, you check it is we brought down to 79%. So the product diversification is happening. So we have introduced gold loan. It is 10% now, 10% of the book, and we have introduced agri loans. It is growing. MSME is growing. Mortgage and mobility loans, all we introduced during the last 5 years. We built teams, and so all this. So over another 3 years, the micro loan concentration will come down to 60%. So, but we will continue to serve the bottom of the pyramid segments. So without losing that focus, we will grow the other books. That's the plan. And on a geographical concentration also, when we started, we have presence only in 10 states. So today we are present in 21 states and 2 union territories, and we are opening more branches in the new geographies, especially UP, Rajasthan, Haryana. These are the states we will be opening more branches. So we are definitely on the geographical concentration, product concentration. We have already addressed, and in 2 3 years we will see the results.
Now, bank frauds are rising. Even the RBI's Trend and Progress Banking in report said that the bank frauds have been on the rise across the segments, especially in the internet segment. From that perspective, is the compliance burden rising for small finance banks as well? And is it too much to bear at the moment?
So it is not anything special to small finance banks. It is across the banking system. It is applicable, especially on the use of technology and the internet. So we are also investing on it, on our, especially on the cyber security part. So it is not, we are not seeing as a burden. So because while we are improving the digital channels, increasing the digital channels, or cost on operations will come down. So that we'll have to, a part of that we have to invest in the improving the security.
Perfect. It was great talking to you, Mr. Thomas. We hope to talk to you again soon, probably after you file your IPO papers and come into the market. Thank you. Thanks a lot.
Thank you. Thank you very much. Thank you so much. Thank you. Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.